Why most traders struggle in the foreign exchange market and in the financial market is because they do not understand the type of trading style that suits their personality. In today's video, we are going to be talking about trading styles and the one that works perfectly fine for your personality. Welcome to another educative video from Coinfinity. My name is Philip, and in today's video, we are going to be looking at the different trading styles we have in the financial world. And without wasting much of our time, I would like to dive into the type of trading style we have. But before we do that, please do keep every form of distraction away and make sure you watch to the end of the video, because we are going to be discussing on some important information that could actually help you remove those trading mistakes you make. And do not miss out on our 5-day free training program bootcamp. Alright, this bootcamp has been made to elevate your trading game. You would understand so many things, and there are so many educational teachings about the financial market, different strategies that you can use in trading the financial market, and how you can go about it. Alright, so whether you're a beginner or you're an intermediate trader, do not forget to sign up using the link in the description of this video so that you can save your spot, start learning, and start leveling up your trading journey. Now, all that aside, what are the trading styles we have in the financial market? Basically, there are three types of trading style. All right, we have the position trading, we have the swing trading, and we have the day trading. Now, under the day trading, we also have scalpers who also take out their trades or close out their position in a single day. All right, scalping is also a form of day trading. Now, swing trading and day trading and even scalping can also be referred to as short-term trading, or sometimes some people might call the day trading and scalping ultra short-term trading. Alright, while position trading is usually a long-term trading. Now, position trading are usually known to be done by investors, people who invest money into stocks, crypto, and even the foreign exchange market. Now, as a position trader, you are literally going to be holding your trades over periods of months, but as a swing trader, you can be holding your trades to a couple of weeks and maximum a month or two. Alright, but when you are day trading and when you are scalping, you are either getting in and out of a position on that same particular day, or you are holding that position for a day or two when it comes to day trading. But when it comes to scalping, you are definitely going to be taking out your position in the matter of minutes to hours on a particular day. Alright, that is why they are called short-term trading. Now, we are going to go into how we can actually analyze as a swing trader and a day trader and even a scalper. All right, the reason we are not going to be touching much on position trading is that most foreign exchange traders are not position traders. All right, because for you to be a position trader, you need to have a pool of liquidity. I mean, you need to have a very large amount of liquidity, to hedge against the market fluctuations. All right, so most retail traders are actually swing traders or day traders and even scalpers. All right, so we are going to touch on this, on how they can carry out analysis using a swing trading strategy, using a day trading strategy, and even scalping strategies. Alright, so here we are on the live chart of the GBP JPY. Alright, so we're going to start with a swing trader's standpoint. So when you want to swing trade, alright, you are going to be holding your trade over a couple of weeks, alright, from 2 weeks to 3 weeks, or from 1 week to 3 weeks, alright, whichever one works, or when your target is being met. So in order for you to actually hold your trades or analyze and hold your trade for that amount of time, you need to actually be carrying out your analysis on a weekly time frame. All right, so your analysis can be done on a weekly time frame. Sometimes it can even be done on a monthly time frame, but then your entry might be on the daily or on the 4-hour, depending on how long you are looking at. So for example, let's say we are looking at this current pair, all right, and we want to analyze this pair. So as a swing trader, I know I'm going to be holding for a very long amount of time, right? Long amount of days. Now, what you want to do is always go to the weekly time frame to start your your analysis and look at the order flow on the weekly time frame. So on this pair, you can zoom back and you can see that this pair has been on an overall bullish trend. All right, price has been making new highs. Every time price makes a new high, it retraces and makes another one. And now we've seen a deep retracement into the swing move, from this swing high right here to this swing down low right here. This is a swing, all right, and price has actually retraced into discount level, which is below 50%, and now we can see price has bounced off this level. So as a swing trader, you would be looking to follow the trend of the weekly time frame. You want to take this trade and hold, all right, But then it is not necessary that you hold all the way up to this point right here, because this can take a month or two to actually get to this point. So what you want to do is just look at the order flow and trade in direction of that order flow. And that is why we say you have to look at the weekly time frame, but your entry criteria might not necessarily be on the weekly time frame. All right, but you are going to be trading with the weekly order flow. So right now we see that we are on a bullish time frame, and we can also see another substructure at this point here. We can also identify another swing move, all right, from this high to this low here. So this is another swing move, and we can also see that it's in correlation with this overall swing move on the chart if we zoom out. All right, so the next step you want to do is, since you know that this is what a swing move and you want to take your trade, now your first entry can either be you refining your trade at this point right here, because we have a key level here, which is a fair value gap, a weekly fair value gap. All right, so if you are one who wanted to take a trade in the direction of this weekly time frame, you might have marked out this key level here, wait for price to enter into this place, and then you go down to the daily time frame, all right, to take your trade. So the moment you see price actually breaking above this last down close candle that touched that weekly fair value gap right here, all right, this last down close candle, the moment price trades and close above it on this particular day, you can actually enter here, put your stop loss below this point here, and wait for the trade to play out to this level right here. So if you are going to be entering on this next day after price has closed above the high of this candle right here, which is on a Friday, all right, if you're going to be entering on a Friday, you can see that if we track how long it is going to take for us to actually hold to this point right here, you can see that it is going to take us around 14 days. All right, or if we look at how long it took before price actually took out this swing high right here, it took 9 days, right, which is this 9 bars that you are seeing there. It took 9 days to get there, which is around a week plus. All right, we know that a week is 7 days, and a week plus 3 days is what it actually took to get there, or rather a week plus 2 days. So you can see that price actually did take out some liquidity pools at this point here, but then did not reach the target objective we would have been looking for if we are looking to hold price all the way up to this point. But as a swing trader, it is also important that you know that you are not necessarily going to be holding all the way up to your particular take profit. You need to be taking out some partial profit as price is going in your direction. That is one thing you need to do. All right, but then let us look at how we can actually take this same trade if we were a day trader. All right, we want to get into the market and we want to get out of the market in a couple of days, not necessarily 1 week, in a couple of 1 day or 2 days. Now, still using this same analysis on the weekly time frame. All right, price has dipped into a key level that we can see. All right, now we can also verify that price has traded away from that our key level, showing us that there is willingness for buyers to get into the market. Right, once price comes into a key level, your key area, and then moves away from that level, it is showing you that that level is sponsored. All right, so now we can actually identify that this level is sponsored when price breaks above this high. Now, as a day trader, what are we going to be looking for? As a day trader, I will not necessarily be looking to hold all the way up to this point, because I'll be looking to take my my entry and get out in a day or 2 days. So as a day trader, I will be using the daily time frame to look for levels where I want to get into and get out from. So on the daily chart, we can see this fair value gap right here that is in the opposing end of our target. All right, and then we can also see that this is our order block on the daily time frame, and price has closed above this. All right, so if we are a day trader, we use the daily time frame for our analysis and our target objective, and then we also use a lower time frame like the 1 hour, all right, for our entry, or the 4 hour, depending on what you see. So now we are going to mark out this point right here where price has traded above it, and then we'll be looking on the next day, on the next few days, to see how we can actually enter this market. So a very simple strategy that you can use is the break and retest strategy. What is that? When you see an impulsive movement and you see a retracement, you want to take your trade. All right, so we can see over here that after this day where price traded and closed above the daily order block. All right, so if we go back, you can actually see it right here. So I'm just going to reset this. So you can see that day right here where price traded and closed above. So we'll start looking for our entries from this day right here, which is on a Friday. So if we go down into the 1 hour time frame, all right, we are going to be looking for our entry on the 1 hour. What we are looking for is an impulse breakout and a retest. All right, so we can see right here that after price has closed above that, we also have what this level of what fair value gap here. Right, so it's not necessary you use only the fair value gap. You can use your last 2 down close candle, which is an order block. All right, this is where you start looking for your patterns after you have marked out your key levels on the daily time frame. As a day trader, you start looking for your patterns. And one thing we can see here is we can see this pattern right here, which is what a liquidity grab, impulse swing, movement higher, and we have seen what another impulsive swing higher, and we still have this order block. Why is it an order block? It took out liquidity before a change in the state of delivery or a change in structure before that impulsive movement. And you can see how price dips into it 2 times. Remember that your order block can be tapped into 1 or 2 times. It's not necessary that your order block is just tapped once before you use them, right? It can be tapped into multiple times, 2 times or 3 times, right? But when it is tapping into that more than 3 times, then it is not high probability. So you want to see either 1, 2, 3 taps and you see price expand, and this you have here, right? So for those of you that trade inducements, all right, this is your inducement low. All right, you can enter on this inducement and your stop loss below this low right here. So you take your trade, your stop loss below this low, and you target forward the opposing end of that daily fair value gap. Now, mind you, you are not necessarily going to be holding all the way up to this point. All right, because why? You have some levels here where you can actually take what your profit from. But because this is on the framework of this analysis is on the weekly time frame, you have more assurance that price could easily get here. All right, but if you do not do this on the weekly time frame, you can simply just take out some partial profits here. This is also giving you a good risk to reward, 1 to 3.72, and you also have another high here which can give you approximately a 1 to 4.9 or 1 to 5. So you can see you can take your profits there and just close for the day. So you can see this is what a day trader would do. Now, if you were a scalper, you do not necessarily need to look at the daily time frame or the weekly time frame to get your framework, because you are looking to get in and out of the market immediately. So as a scalper, you can actually just look at this and say, okay, price is going up, price is showing us what? A bullish candle. Price is breaking highs and it's not retesting the low. So all you need to do is go into a 5-minute chart, all right, a 5-minute or a 1-minute chart, and look for what a break and retest, the same pattern that you would usually use on on the higher time frame. That is the same thing you would want to use on the 15 minutes or the 5 minutes time frame. So practically it is almost the same thing. All right, but then you can see we have here this break and retest pattern right here. So if you just remove this, you can see price breaking out of this high, which is a consolidation breakout. Price did not get into this order block, but then you can see this fair value gap right here. All right, so how do you enter on a fair value gap? For those of you who use ICT, your entry would be here and your exit or your stop loss would be below the candle that created the fair value gap. All right, that should be your entry, and then you'll be targeting a 1-to-1 or a 1-to-2 maximum risk to reward ratio. Now, this is the most important factor of trading strategies. When you are a swing trader, all right, you would literally be targeting more risk to reward than that of a scalper. All right, now do not mistake what I'm saying for not getting a high risk to reward trades as a scalper. What I'm saying is, as a scalper, price can actually turn around at any point. So you are very, very vulnerable to, holding trades and looking for a 1 to 5 or a 1 to 6 or a 1 to 7. As you can see right here, if you're someone who took this trade right here and you moved your stop loss and you were holding for 1 to 6 or 1 to 7, price would have come back, close you out at break even, and continue going higher. So it is best you actually take a 1 to 2 maximum, because that is the most reoccurring risk to reward that scalpers do get based on my backtesting data. Right, it is very, very easy for you to get a 1 to 2, and then after you get your 1 to 2, you can take out like 50 to 70% of what your total risk at this 1 to 2, and then hold the remaining to whatever target you are looking for. Right, it's not necessary that you just hold everything. That is why most people, when they are scalping, they hold their trades and price still comes out to take them out and continue going in direction. It is because this is just a 15 minutes or a 5 minutes or a 1 minute time frame. You are not supposed to, hold it and wait for price to go all the way up. You are not swing trading. If you are swing trading, then it would be ideal for you to hold and not be bothered about, the price action, because a news event can literally come out and pick you out of the market. So you want to take your 1 to 2, take out most of your position there, and then hold the remainder. Whatever price action does, you have secured your profits and you are free from risk. That is one thing that you need to understand when you want to become a scalper. All right. So as a swing trader, maybe you do not have enough time on your hand. You have a job you're doing. Swing trading is perfectly fine for you. If you're a day trader, it means that you can actually come into the chart and check the chart on a daily basis. All right. It is not necessary that you check the chart every single day, but you can have that time to come into the chart and check them on a daily basis and watch what price action is doing. And scalping can be suitable for even individuals who have a 9 to 5 or do not have a lot of time in their hands. So they just want to come into the market, take their 1 to 2, and that's all for the day. All right. As a scalper, you would literally spend more time on the market, but then if you have the ability to see your setup immediately, then you can just take your trade, get in and out in a matter of minutes to hours, and you are done for the day. Right? It is as easy as that. But then when hunting for setup, you need to be actively looking for your setups to form. So guys, if you want to learn more about these strategies and other patterns, entry patterns that you can use to get into the market when you have identified your framework on the higher time frame from the weekly or the daily time frame, do well to head on to CoinLearnity website at www.coinlearnity.com, or use the link in the description below this video, and then head on to our website, purchase any of the advanced forex trading course, and then you'll be able to see what strategy is best for identifying your order flow direction and even getting in and out of trades. All right, another thing you can do is participate in the CoinLearnity reward program, win amazing gifts and bonuses like trading vouchers, trading gifts and trading bonuses, and even get cash rewards with us at CoinLearnity. So all you need to do is use the link in the description below, head on to CoinLearnity website and participate in the rewards program by watching the educative videos that are embedded in the rewards section and completing daily logins. All right, with that you'll be able to win these amazing bonuses and cash rewards. And do not forget to follow us on our Instagram, Facebook, and also subscribe to our YouTube channel, especially this video. So if you have not subscribed, do well to hit that subscribe button, turn on post notifications so that you get alerted anytime we drop a new video. And until I come your way again next time, remember to always trade well and trade safe.
Learn and earn with CoinLearnity. Ready to boost your knowledge and get rewarded? With CoinLearnity, every minute you spend learning turns into real rewards. Here's how it works. 1. Sign up or log in to your account. 2. Head over to the Rewards tab in your personal learning area. 3. Watch our free video tutorials and earn CoinLearnity tokens for every minute you spend learning. The more you watch, the more tokens you collect, and those tokens can be redeemed for amazing rewards like gift vouchers, trading bonuses, cash rewards, and more. Don't miss out. Start your learning journey with CoinLearnity today and make every lesson count.